Welcome, Rohan, retiring to stock market session 4 plus the intro session, March 16th, 2025. How are you?
I'm good. How are you, Eric?
Very good, thank you. Sunday. I want to say I was reviewing the last session and our last session, and you're pretty advanced. You have like a big brain, and I think we're by the time we get to 8, 9, 10, we're going to be on really advanced trades, and I think I think you're on a really good pace, and I appreciate you.
Oh, thank you. Thank you. Yeah, I'm learning. I'm learning. And then yeah, I'm learning from you, and it's been a good experience with learning and trying to do the same things with the trades and everything, and kind of getting that hands-on experience as well. So uh,
Wonderful. Are you getting your money's worth?
I am absolutely. Absolutely. I'm being able to do all these trades and getting your guidance and support along the way. I mean, with this volatile market, I mean, if I don't think if I did not have the help, I would be pretty worried and scared, I mean, with all these volatility but I'm happy that, I have your help and I can reach out to you for assistance and everything and get your guidance. So uh, that gives
Appreciate
me
that.
more uh, it helps me further to kind of make proper decisions in it.
Wonderful. And it'll shorten your learning curve because how would you do it just on your own?
Yeah.
Great, great. Okay. Um, you got a couple of questions for me? I mean, first of all, last session, our session 3, we were doing cover call leaps on Tesla.
Right.
We got $4,000, which is awesome, by the way. Congratulations.
Thank you. Yep. Yep.
So, I mean, sometimes, by session 3, I'm teaching math, I'm teaching really basic stuff, cover call, you know.
No, I mean, I think we did good because in the previous session you did covered call and you explained about stacking, and that's exactly what I did the following week. Because I sold a covered call, which is a leap. So I got $4,000, and then I used that money to do the stacking by buying hood, and that seems to be doing okay for now. So
Nice. I know we took a hit last week, but then we
yeah,
were up Friday.
yep, we were up Friday, so I'm getting there pretty much. But I did sell a covered call on it, so I think I'm pretty. I would say I'm pretty. At least for now, I'm safe on that. There's no loss or anything like that.
I want you to start writing it down in your journal, the premiums from the cover calls. For example, you got a 4,060 from Tesla, correct?
Right.
4,060.
That's right.
And then write that down. And then if you're getting, how much are you getting a month from Hood? Estimate.
About $160.
The list sounds a little low, but
It is
maybe, maybe
because the thing is, I think the price dropped drastically on Monday, and I just didn't get a chance to trade it. And the price just went low, and the premium also dropped for the option. So I just went ahead with the premium, with the covered call. Uh,
I think the correct decision is to write the lower call when the stock drops.
oh, right,
So
the lower covered call when the stock drops.
yeah, the stock is dropping from let's say
Uh-huh.
50 to 45. Instead of writing the 50, instead of writing the 55 at 50, you write the 50 if it's 45, and then if it drops to 40, you write the 45, and it drops to 35, you write the 40.
Okay.
And what I want you to do is when you write down these premiums, I think you should get about 250 on Hood, okay? Maybe $300. So let's say 250. Because I want you to do 10 a month. I'm sorry, I want you to do 10 a year. And then you're going to receive $2,500, okay?
Right.
And then you're going to count what's called share growth loss, which may be this Hood goes from 50 to 45 to 40. You have a 10-point share growth loss right there. But you're not afraid to sell the cover calls lower, so you still get the premium, and your premium is going to outweigh your share growth loss over time.
Okay, okay. See, I didn't account into that.
Yes, and you need to note that in your journal. So be prepared to sell the stock lower on the cover call. It may not get assigned. It may not go in the money, but if it goes in the money, that's okay because you're getting premium, consistent premium.
Right,
So every month you're getting consistent premium. Remember, write it down. Write down the amount because only some months will the stock go down, not all the months. But all the months you'll be getting the premium, and that's the advantage you have by being a cover call writer. Just think of the people buying the option from you, buying this $160 from you that
right.
will go down to zero by
Yeah,
expiration if the stock doesn't go up. So you're on the other side of that. You're on the selling it. It decays in your favor. You're getting 160 a month, ideally 250 for hood, and focusing on not the share growth, not the stock, not the buy and sell of the stock shares, but focusing on what? The premium.
the premium, right? The option premium. Okay.
Yeah, and in this case, the monthly. Now, you said you had 15 cover calls on the monthly. That's
Yes.
great. So you need to write down your total income, the total premium
Mm-hmm.
income. Once you do that, you can get an amount of how much you make a month. You have to balance that with share growth loss, for example.
Okay.
Sometimes you'll have share growth gains. So sometimes you'll sell the hood. What's hood right now? Let me pull it up. You have options expiring on Friday, right?
Yes.
This Friday. So you're on hood. Hood is 39. It was up 3. So if you're doing a hood today, I would go April. But you already did it, right?
Yes, I already did that.
But I would think of it like it being at 40, 39, 24, like close to 40
So,
strike.
so
And I
I
would
bought it at.
do, hang on. I would
Mhm.
do the 42 for 239. That's what I would do. Because you're getting 2 points of share growth and 239 premium. Even if you bought it at 50, even if you bought the shares at 60, that's okay because you're gonna focus on the premium. Okay, not the share movement.
Got it.
At the expiration, you can let it get assigned or you can buy it back.
Right.
Buy it back, you're really at the expiration, there's no extrinsic value. There's no fluff. It's all money value, all intrinsic value. So let's say the stock is 40 and you're buying back to 35, cover call. You're going to pay $5 because it's $5 in the money. But really, you're just buying back your share growth. So instead of having to sell it at 35, you buy back it at 40. You're going to now have the shares at 40. So you're just getting the full value of your shares. You're not losing money on paper, but you're spending more money to keep the position. So you might have to go from what I do. If I have like 3 cover calls, I might go down to 2 cover calls. Or if I have 3 cover calls and I want to buy back my cover call and I spend more money, I might have to close my weakest position in the account in another part of the account. Or I might have to make a deposit to keep those positions because it costs me more to buy it back. Understand?
Right. Right.
You had a question on that?
No, no, no. This makes sense. Because what I did was, and probably I did something stupid, was bought it at 43.28 on Friday, and then it closed at 44 something, but the next day it kind of just dropped to 36.
You
And
didn't have a cover call?
so I bought a covered call for 45, and that's why it was just $1 and 2016 or $1.20 or something cents per share premium.
So you bought the
So
shares and then you waited.
I waited, yes, yes. I just did not do it at that time after I buying the shares immediately.
So let's think perspective, Mr. Morgan. Okay.
Right.
You go into Mr. Morgan's office, you park your car on the dirt floor, by the way. You go upstairs to the trading floor, and there's about 25 brokers on that floor, and you're one of them. And there's a supervisor there. The supervisor says, Rohan, you bought that hood stock, and the stock dropped. You didn't have a cover call.
Yeah.
Had you had a cover call, that would have been much better, right?
Oh yeah, I would have had a good premium. I would have easily got a like 250 to 300 premium, and a share growth as well if it went through uh, at that price. But yeah, yeah,
Now consider the people who have the shares with no cover call. They're going through all these peaks and valleys, not really making any money because it's going up and down without the benefit of the cover call. But when you have a cover call, even if you have some share growth loss, it's better just to write the cover call. So you did the right thing at the time, but you lost the opportunity when it was higher,
right,
which is to say that when the stock swings up, ideally is when you want to write the cover call. When the stock dips is when you want to sell the naked put or sell the put. Or
right,
you can actually buy back your cover call when its stock dips. Sell that cover call when it swings up. Buy back the cover call when it dips. This is called trading your cover call. Write it down. Trading your cover call. Improve your CC. The first rule is write the cover call, leave it for a month, let it expire, walk away. No worries.
right,
You get a sign, let it get a sign. No worries. Second rule is write the cover call. If the stock dips to a certain point and you think that stock's going to go back up, you can try to trade your cover call to make more money. So if you're getting 160 for yours, first of all, I want you to improve that to 250. Okay.
okay,
And one way you can do that, improve it 250 a month, because I'm looking to get 10 cover calls, is here. Hood is 39, and April is showing the 42 is 239 and the 42.
right,
So 39, 24, closer to the 40 strike, right? The 2 points higher. If you're doing another position today, 2 points higher, 239 premium, perfect. And then I always like to do 239. Let's do the ROI. 239 divided by your cost of 39.24. Not your cost, but the cost that it is today.
right,
You never go by your cost because nobody cares where you bought the stock. 6% return. That's what you're looking at to get every month times
right,
10. The stock dropped and you still wrote the same cover call, which is to say that that's only going to benefit you if the stock goes all the way back up. If the
yeah,
stock goes all the way back up, you're going to have the 160 premium, but you're also going to have all this share growth.
right,
However, a bird in the hand is worth two in the bush. Better to take the premium you can get because we don't know if the share growth is going to be there.
right,
We don't know, but we know the premium. That's consistent. Premium is determined. Write it down. Premium for writing CC and put is determined. You know what it is. When you sell it, you know what it is. Share growth is not certain. It's not determined. Not
right,
determined. So keep that in mind. So you don't know if it's going to go back up. So what we should have done is write the lower cover call, okay,
right,
to get around 250. But that's my opinion. You can kind of play with it. If you really think it's going to go back up, then, you can write the higher cover call. But if the stock drops, you need to write the lower one. Stock swings up, you can write the higher one. Make sense?
yep, yep,
Now we
makes sense.
discussed Tesla in the money on the leap, getting more support protection on the downside. What if we didn't go up Friday, and we're looking at tariffs coming on April 2nd. We're looking at some problems coming on the market. Maybe we're in a downtrend, more decisive downtrend. Hood is 39.24. What you can do, you can write the cover call at the money at 39. it'll give you 370. You should be able, if you zoom in, you should be able to see this. You
Right.
get 370, and that is a return of. First of all, you have to take a share growth loss of 24 cents. The stock is 39.24. So 3.70 minus 24. Your gain is really 336 because you have a 24-cent share growth loss. You buy ahead here at 39.24 instead of 39. So the total premium is 336 divided by your cost of 39.24. Now you're getting 8.5% return. That's why Hood's a great cover call stock.
Right.
But you have no upside potential, no share growth, zero. And you
Right.
have all the exposure to the downside. That's the thing. And here, when you have exposure to the downside, whether you have a exposure that may go down 5 points or even 10 points, that the 336 premium, the 259 premium, even if you only get 160, it's going to eventually outperform the amount the stock can go down. And your perspective is going to change, Rohan, once you have 10, 20, 30 cover calls, and you're into what's called a cash cow position. I want you to write down these premiums, 239, 336, 160. Once you get the price of the hood you originally paid for it, the original price you paid for the hood, once you get to that price, let's say, was it 45, 44,
43.
43? Write it down here on my note. Hood
43.
at 43. Do you know what change it was?
28.
43.28. Once you collect 43 points in premium and 28 cents, you have what's called a cash cow position. Whereas you got all your money back, you invested on premiums, and now you get to the point where you can't lose money on paper, because, for example, if you put all your premiums on this side of your account here, 43 points, and you still have your shares at 43. Let's say the price doesn't move. Fast forward a year and a half, price doesn't move. You have 43 premiums here, 43 stock here, and the stock can go down to zero, and you still have your investment back in premium, don't you?
Right. Right. Yep.
So
Yep.
keep that in mind, and it's going to give you more confidence, and it's going to give you more, I think, resolve in doing these trades, and not being afraid to do the lower cover call, because the premiums are paramount. The premiums are paramount. I just use that word, not the share price movement.
Right.
Okay, questions on that?
No, that's good. I have a question on so how many stocks should we do premium covered calls on, and how many should we keep for long-term growth? Like I'm trying to decide on, I mean, the decision is mine. I understand that, but I'm trying to see uh what would be the maximum benefit. Um, you
I
know,
like to balance your account so you control your drawdown, which is controlling the amount of money you can lose. So
right.
I like to have some dividends. Do you have dividends?
I have a stock, I have LYB, which pays good dividend.
LYB.
Yeah.
Do you have it in your trading account?
Yes.
Let me pull it up. What's the yield?
I think it was like 7%.
Not familiar with that. Lidl Base Industries.
That's right.
Market cap 23 billion. 1.9 million volume, good. Has a PE 17, good. Yield 7%, good. Let me look at the 10-year chart. I'm gonna look at that. Not not bad.
Right. It's not bad. It's a good, yep.
A lot of
Yep.
volatility, but it looks like it stayed the same in 10 years.
That's
Actually,
right.
yeah, it has a 10 years. Good job. Um, so put this one in your trading account and have it like a good position. And you probably should have one or two more. Because ideally you want to
Right.
have, like, let's say, at least 30%,
Yes.
20, 30% dividends. And that way the dividends, the theory is that they have a lower beta, lower drawdown. So when you have a real correction, not last week what we had, a real correction, 20%, 30%. Sometimes they say 40% is a crash. Doesn't matter what they call it. A strong correction is going to bring your whole account down, and the dividends will only if the tech stocks are dropping 25%, the dividends may drop 15%. That's going to help you. Understand?
Yes, yes,
Okay, so ideally, you want to have, let's say, LYB,
right.
and then maybe another one. Do you have another dividend stock?
I mean, like I have Google, which gives you some dividend.
No, no,
It's
no, no, no.
less.
Google's not a dividend stock. It has a small dividend.
Yeah, it has. So
Dividend
another one
stock
I'm
is like
looking at.
3%.
Right. Okay. I'm looking at Pepsi. I'm
Pepsi.
looking to get
I
Pepsi.
like Pepsi. Do Pepsi. Okay.
Right.
I'm just gonna put it here for your note. With these two, it's gonna give you some dividend income, and let me tell you, you're gonna you might not think that 7% a year or 3% a year on Pepsi, 7% a year on how do you say it, Lidl,
Yeah, I just call it LYB stock.
on LYB. You may not think it's a lot of money, but when your account is down and those dividends come in, that's all the
Yeah,
money in the world. You know,
right. And also I have SCHD, which it's an ETF, but it's a high paying dividend ETF, which is 3%.
SCHD.
Yes.
Should I look it up?
Yeah, sure.
Um, I don't prefer ETFs, but
Yeah, this is something
SCHD.
which I bought a couple of years back, or 1 or 2 years back.
Yield is 3.8 good, $27 stock, uh,
It just went through a split.
15 million volume. What?
It just went through a split.
Okay, and I see the market cap is 55 billion, so that's good. It
So
doesn't
it's
show a
got
PE,
Pepsi.
but it's because it's a dividend.
Yeah, it's got PE, it's got Pepsi, it's got Coke, it's got AbbVie, so it's got a mix of those dividend shares.
It has a nice return.
Yeah, it has a nice return too.
So it looks like you're taking your time to pick your stocks. So you're going to be doing great. Let's just say we use these three for your account example. And then you can have, let's say this is 30% of your account, and you have 70% for your cover calls. Sound good?
Right, got it.
And if you want to use maybe 5% or 10% for trading, then that's okay too. We can talk about that a little later. Trading it would mean buying a call option or buying a call spread. You know what a call spread is?
No, and
So
that's another thing.
trading, you can trade shares. Let's say buy 100 shares of Hood. Here, this is how I trade. Okay. I'm not saying you're going to do this. I want you to practice first on paper. Plan first. They
Hmm.
say plan your play, then play your plan. Don't just jump into trading, okay? But let's go back to Hood, okay? So Hood's doing good. It has some dips, but it comes back. And Robinhood is doing kind of good. Actually, it's not to the point where it started. Robinhood chart looks something like this.
Right.
It's still not to where it started, but here
Yeah.
it's coming back and it kind of dipped. So if you look at the last, let's say 6 months, you'll have movements. You'll have some bars. All these movements are showing how much it likes to move.
Right.
If you look at these movements, what you'll find is that these movements are the same. Look at this. There's a twin right there. There's a twin.
Yeah.
They move at the same distance, and then it dips. It dips the same distance.
Right.
This one's a big one here, maybe a double move here. But then here's the same, and then here's maybe a double move. But if you look, you'll see kind of. So what you're looking to do is, well, let's say at the point of a dip, you'll buy, let's say, 100 shares,
Hmm.
or you can do 50 shares, but it depends on how much. Yeah. So let's say stock is $40, and let's say we look at the history, And we're seeing that, let's say 6 month chart, we're seeing that hood likes to move about 2 points, 2 points per movement, per mountain per dip, about 2 points, 2 points per hood. So you buy 100 shares after it dips 2 points because we're waiting for that dip, okay? And it did dip last week, correct?
Yes, it
And
did.
it started, what did it do? It went right back up, right?
Yep.
You can blame the market, but I'm just going by the technicals. The technicals will repeat. Charts are not random. People will tell you market's random, charts random. No. The charts have sort of a pattern, if you
Right.
will.
Yep.
So let's say we identify that hood's moving 2 points. So wait for it to dip, and then we buy 100 shares. What would happen if you bought the 100 shares when it dipped last week, and then now it went back up, right?
Yeah, I would have got like $3 share growth easily.
Right. So if it moves 2 points, what I like to do is just get half the movement. So 1 point. Okay. In other words, if it's going to move 2 points like this, up, down, it's easy. What I'm doing, I don't want to get greedy. I want to make it so it's a high chance of success. It's an easy trade. So we see Tesla move this much. We see Hood move this much. We want to take half of that and capture that as a profit in a trade. So in this case, it would be 1 point. So buy 100 shares of Hood. Let's say it drops from 39 to 24 to 37.24, which you probably won't do Monday because Monday will probably go higher. I think maybe.
Right.
However, Powell's going to talk, and if he talks about if Powell talks about lowering interest rates, that's going to help the market. They're going to talk about tariffs on April 2nd. If there's no problems, it's probably going to raise the market. And we're discussing solving the Ukraine Russia battle war. And if
Right.
that gets better, probably going to send the market up. So a lot of possibilities for the uptick. There's always chance for the down, but the next dip may come later on after it goes up. But once it does dip 2 points, we buy it. Then when it goes up 1 point, we'll close at a profit of 1 point. So 2 points, normal move, 1 point gain, goal. They say, wise man says, if you don't have a goal, chances are you won't get there. So the goal is to get 1 point on Hood. In this case, it's a one you can do it once a month, trade once a week, depending
Hmm.
on how much it moves. And then also, if you notice, it's not only the movement, is the distance, the size of the movement is 1 point or 2 points. The timing is the same also. It'll move in a certain time. Like in a week, it'll move 2 points, or in a month, it'll move 2 points. That's also pretty consistent, like a pattern. So you're looking for the time frame, and also for the amount of movement. What you're looking for is a pattern. Okay. I like to trade Starbucks. I always say Starbucks likes to move 4 points if you look at the pattern. And if Starbucks is moving 4 points, let's say a month, then I'll do a monthly trade. In my mind, I'm gonna say I'm gonna do 1 month trade. I'm gonna wait for it to dip and buy it. I'm gonna get, if it moves 4 points, I'm gonna get 2 points. I'm gonna get 2 points and then sell it. That's how
Okay.
I trade. You can do shares, or you can do the call option. Have you ever traded call options?
Trade call options, no. I mean, I buy the call options, but and then I close the call option, but that's pretty much it. I've never done trading of call options other than that.
It's risky. It's kind of like gambling in a casino. You're making risky trades. However, if you see a trend like Starbucks dipped 4 points or Hood dipped 2 points, and we're monitoring it, then we can buy at the dip, but we can ride the uptrend. We kind of wait. There's a caveat. We don't just buy when it dips. We wait for it to start coming back. That's really the time when it's ready to go up, when it starts to come back. So you don't just buy it immediately when it dips. You see if it's going to start building up. That's really the time when you want to get in, not just because it dipped. Because if it dipped, it can also always go lower, right?
Right. Right.
Make sense?
Yep. No, that makes sense.
So if I buy the now let's do the option real quick. If I buy the option in hood, I'm just gonna buy a call like option next week. Let's say next Friday, hood dips 2 points, and I'm gonna put the 20-day chart. I'll also use the 20-day for trading. Oops. And you'll see movements on the 20-day. I think it's a good also trading. Something like this.
Right. That's
So
pretty.
what I'll do, I'll buy that. Now we're gonna buy the call. Okay, for when you buy the call, you go 3 months out. April, May, June. So you buy June. Now consider buy 100 shares of hood. That costs you $4,000, right?
Yes.
Because it's $40 a share. But what would the call option buy you? Charge you? What I like to do is buy the call option at the money. So it's 39.24. You buy the 40 call or the 39 call.
Right.
39 call is showing $600 for 3 months out. 630 by 640. Okay.
Right.
So 630, 639 is showing 630 by 640. So I'm gonna pay $640. $640. And that indicates I'm controlling 100 shares of hood with one call option for 3 months out.
Right.
One call, 3 months out. That way you have 90 days to trade. Have enough time to trade. You can have enough of these movements to trade it. You're spending $640 with a 39 call, which is at the money. Stock price $39.24. Now, instead of spending $4,000, Rohan, you're
Right.
spending $600, $640.
Right.
So you see
Yep.
how that is, but you're still controlling technically 100 shares of stock.
That's right.
That's leverage. Okay, now let's check the actual leverage. I'm gonna push down on. You have Schwab.
Yes.
Push down on this. I push down on it, and now it gives me the delta here. Delta 59.
Right.
So for every point movement the stock moves, I'm gonna get 59. Let's just say 60 cents on the call option.
Right. Okay.
And if I'm getting 60 cents on the call option, that means that if the stock moves 2 points, I'm gonna get $1.20
Right.
on the option.
Yeah.
So
That's $120. Huh?
yeah, yeah. But for hood, since you're doing a 2 point move, you want to get 1 point. You really only need to get 60 cents on the option, because 60 cents would mean half of the movement. If hood's moving 2 points a move, and you're at delta 60, then that's 120 increase in the option, but it's only 60 cents on half the move. So technically, you can buy the shares at buy the option at 640, and then plus 60 cents, and sell at 720. You follow me? That's a 10% return. Is that too much?
Yeah. I have to. The
Let's say
last
about
part went.
hood example. Let's say about hood option 3 months out. Strike 39
Right.
for $640.
That's right.
And my plan is to sell it at 720.
Okay.
60 cents profit. Let me just do the math on that. It's a little more than 10%. Just so I can, for your journal, you can write 0.6 divided by 6.4. 9.3%
Right.
return.
But when will it reach 720? I mean, it will reach 720
When the
if
stock goes up 2 points,
when the stock goes up 2 points. Okay.
because the delta 60.
Mm-hmm.
Now, if you're gonna get, if you are gonna get 60 points, 60 cents
Right.
But if I'm doing a trade and I want to get 50 cents, who's going to hit their goal faster?
Yeah, the one with 50 cents, right?
Right. So I can get 50 cents and I can sell, and then that can cause the stock price to move down. And then you'll lose your goal of 60 cents. You see?
Yeah.
And if other traders are getting greedy and want to get $2, $3, $4, $5 for their hood call option, and they're waiting to get to $5, $3, $4, but you only want to get 60 cents, who's going to hit their goal faster?
Yeah, 60 cents.
And who has a higher chance of success?
60 cents, right? Yeah.
Because other option buyers want to get $3, $4, $5. They want to double their money, triple their money. Who's more likely to have a successful trade? Someone trying to get 10% return, or trying to get $1 in the stock trade, share trade, or someone that's trying to get $5, $10 and then double their option, triple their option? Who's gonna have a higher chance of success?
Yeah, the 10% return easily.
That's how I want you to think about trading. Take 5% in your account, 10% in your account. If you have 100K, maybe 5K or 10K at the most to do a trade. Your other positions are going to be in cover calls and dividends as a foundation, as the majority of your account. Big amount of money in cover call income and dividends. Small amount of money in trading, because what? Because the trading can go the other way. You can
Right.
lose, and there's a higher chance of losing also on trading.
Right.
But if you take these small, here's my teaching in trading. Take a small gain and walk away. Take a small gain and walk away. Now, this is to say that most of your gains are going to be long-term share growth gains. Microsoft at 300 goes to 1,000. Netflix at
Right.
100 goes to 700. Those are going to be the biggest gains you're going to see. But that happens over a long term, 2 years, 3 years.
Right.
Other gains you're going to see, if you do this right, is your cover call income. HUD 250 a month. Pound here 600 a month. Tesla 2,000 a month. And then add up all these payments over 1 year, 2 years. That's another gain, type of gain. Hit a cash cow position. That's another type of gain. This trading, you may not be for you, but you can do some exercises. Get 100 shares, sell it at a $2 profit or $1 profit. Get an option, sell at a $1 profit or 60 cents or 50 cents profit,
Right.
and then see if that's going to be your style. When you have your losses, it's going to be the time that you're going to think, well, I guess I didn't do that right. Maybe I will do that again. But sometimes, let's say less than 5% of traders can be good at trading. Less than 5%. And I'll say that some people just have a knack for it, like they have intuition. You know what I mean by intuition?
Yeah. Yeah.
You can't really put it in a cookie cutter. It's just like a
Yep.
gut feeling, like you can see what's going to happen next.
Right.
That's it. Write this down. Intuition. To know what's going to happen next. Intuition.
I mean, that's probably, I mean, you get that from experience, like, after being in the industry for so many years or working with the
Yes.
industry. Yeah.
Yes. You have a job, right?
Yeah. Yeah.
So you probably make some money. You probably make a lot of money for your company with that big
Yeah.
brain of yours.
Yeah.
So you can see something happening, intuition. You're like, oh, I know what's going to happen next. I've seen this before. You know.
Yeah. 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 I
Same
do
thing
that
when
with
you go
debugging.
ahead.
Yeah.
Go
No,
ahead.
no, I do that with finding out issues in the when a customer hits the issue. Okay, I've
Exactly.
seen this, and I know what
Exactly.
how. Yeah.
Same thing with the stocks. When you see HUD dip, we know we think it's going to come back because we've seen it so many times.
Yeah.
We get our premium on Palantir. We know that's going to add up over time. We do our leap on Tesla. We know how to do that. We're going to do another leap next year. Intuition, not knowing for sure what's going to happen, but knowing, but making a determined amount of money on the premium and giving a potential for the upside in the share growth, but not knowing for sure until it happens.
Got it.
And making a plan to get 2 points in the hood trade, 1 point in the option, or 60 cents in the option, but not knowing for sure until it happens. Questions?
No, I don't have questions at this time.
I didn't get to all your questions, but here it says your 15 cover calls are expiring, so just do another month, April.
Right. Yep.
If you want to, you can look at a 3 month. You can look at some of your calls on a 3 month. The advantage of a 3 month is you're going to get less per month, but you're going to get more money up front, so you can use that trade to do something else if you want. Maybe you can do how many hood do you have? 100?
I have 200 now.
200.
Yes,
How about Palantir?
200.
So 200 hood,
So, but the hood that I
200
bought for 100
Palantir.
last week, that is expiring in April now.
Yeah, you already did it. I understand. So in April,
But
you'll do that over.
100 is going to expire this month, and for that I already got like 250 or something like that. So I made 250 on that.
Yeah,
One of
see?
those.
250. See, I
Yeah,
was right.
yeah,
You can do a hood for 3 months. Show you. It pays nice. I'll show you. And we're almost to the time.
yeah.
So let's wrap up. So I'll show you an example. One of your hoods you can do 3 months and watch what happens. So we'll do June. We'll do one for the monthly and then one for June and watch what happens. I'm gonna show you something. $39.24 today, right? Don't worry about
Mhm.
what you buy it at. You're looking at to get premium. You're playing the premium strategy. So June is $6, right? To buy the
Yeah,
call. You can sell the 40 call for $580, $595. So $580. So bring in $580. Okay. Just for the 40. And so you're not looking to get share growth. You're just looking to get more premium. And you take that $600, you can put it to buy 100 shares of Rigetti
right. Yeah,
or or D-Wave, QBTS,
right.
or put it to something else, on the monthly. And then do that for 3 months. And on Rigetti, I was getting like $180 or $2 for Rigetti for the 3 months. And 3 months,
Yeah,
that brings $600. And as long as the stock survives, then that's $600 you got. And you got all your money, you doubled your money by the
yeah.
premium. You reinvested that. Stacking.
Right. Stacking. Yeah, that's a very powerful thing.
Yeah, so you can do the monthly, you can do 3 month, and you can also look at the leap. We looked at the leap last time, you did the Tesla. Questions before you go? Last questions.
No, no, this is I'll try this out. I'll try this kind of trade out. And
And before you do it, just kind of wait, just wait, look at it a lot, wait, and then at the right time, you go in for the trade.
right.
A sniper,
Yeah,
you
yeah.
have to wait for the right time to go in for the kill.
Yep.
I used to go use eBay, and they would call sniping when you bid the last bid before the auction ended. You snipe it. Let's say we had, I don't know, you're getting something
Yeah,
hot, a hot topic, hot item, and the price is $100, and then someone else was bidding on you, bidding 2, 3 people were bidding with you. So then
right.
$100, I want this item. I just sniped it like 110 right before the option expired, and I'll get it. It's the right time. You know, and similar with the stock, you want to just snipe it like at the right time. And if the stock goes the wrong way, you're gonna lose money.
Yeah,
So last thing, you can plan to sell at a loss at a certain time. Like if you're doing a trade, 5% of your account, you want to have a loss limit. Write down loss limit. The total amount of money you want to lose, write it down. If you're only getting a point or 2 points, then your loss limit should also be 1 or 2 points. That way you're even. 2 points up, you sell at a profit. 2 points down, you sell at a loss because you're balancing.
got it.
What happened in a trade, you get into a trade, you want to make 2 points in hood or a point in hood, and it goes down a point, then it goes down another point. Now you're at a loss, instead of having to have a bigger loss, which sometimes happens, just sell it. Sell your 100 shares, sell your call option. Take a 1 point or 2 point loss because what? You were wrong. It went the wrong way.
Right.
You're going to close your position. Totally different strategy than doing the monthly cover call trade. On the monthly cover call trade, you stay with it because you're looking to play the long game. On the long-term share growth, stay with it. IRA account, you have Microsoft, you have Google, just stay with it because you're going long-term. But on the short-term 3-month option trade, you're Mr. Morgan's looking over your shoulder. Are you losing money? You better close that position right away. You were wrong, like that. And then if you're right, also snipe it.
Right.
Sound good?
Yep. No, sounds good.
Let's close out. Call it a win. Appreciate you. Until next week.
Yep. Sounds good, Eric.
Send you this